Hey, good morning. Okay. Wow. Yesterday was so eventful. Wicked. Alexander, well, first of all, this morning a little calmer, right? And I would also not be surprised if they just remember how I said they have to figure out a way to defend 3.8% 10-year, and they did for a little bit, right? August 5th stopped going down. It literally tagged my 3.67 quarterly line in the sand. Oh my God. Anyway, it hopped back above 3.8% and they've been holding. I have the same feeling about crude, but not 70 perfectly. In other words, 70 on a monthly. It can go all the way back down to 65, 65. And for longtime clients, you know that level. It's like a really, really ping pong level. So this is a little bit likely to get defended this afternoon, or I should say yesterday. I don't even know when it was. Let me just find this real quick. Let me find it. Oh, come on. There we go. So here's an example of why I think, or a few examples of why I think it can hang in there. In other words, not crash below 70. OPEC members are discussing the possibility of delaying a planned increase in production by 8 countries next month, according to sources. For how long? We could hear it could be until start of 2025. So think election. So OPEC members pushing out, right? The planned increase in production, they are going to like keep this in a range, $70 to $80 range, most likely. Now, come the election, especially if there's a Trump, choice, it's very likely that it's going to pierce and get below, or if there's something that maybe, intonates more supply in the market in a big way, it could definitely pierce and get and stay below. And then that carry trade unwind, as I mentioned, we've got the yen, we've got bonds as a carry trade, we've got oil as a carry trade. So they're important. That's why I'm stuck on this kind of level of potential intervention at this 70 area. So we drop below that 70, my monthly chart that I have shown for a long, long time, that we get below that 70, and we're not just going to go down to 60, we're going to go down to 50. So it's kind of important. But we're a little early on that, and clearly they're coming in to try and do some kind of shenanigans to make sure, let's just say, it's not so easy to get down there. You also have, let's put this back up here. You also have a chart that I think is a little helpful here from those who might know. Hold on, there we go. I'm trying to. Menther Q. We use spot gamma. Menther Q is another kind of options and futures on options quant service. And I know that Michael in his channel in Slack posts some of their stuff, right? This is kind of a put support for crude down here at this 70 level. It wouldn't surprise me if this, if you will, put wall gets supported. So we've got some optionality that I see as a potential area for oil to get supported, plus that quote unquote intervention collar. Let's just see, but that's a really big thesis of mine, right? So that monthly chart that I show you in intermarket analysis is just key for my theme, a very, very important thing of how crashing oil will bring yields lower. And already the mortgage rates, right, are now at 6.37 for a 30-year. I've been on this since March, that we're going to have a quote unquote a warm summer housing market call, which just meant specifically we're going to have interest rates fall. 30-year is pulling down the 10-year. I've written about that a lot also in Market Thoughts. So let's kind of review for those who might not know. Let me just see. All right. So I write a lot of late on themes because I think there's tactical trading, right? Like yesterday. Oh my goodness, was it dealer hedging? Alexander sent me a great article I want to go over as well. But just to kind of remind some of these themes, and you can see back here, sorry, I'm making you, I know, crazy with your eyes here, but these are trading room summaries. This is a long one. Mortgage rates matter to market returns. I'm really on this. So I did a lot of work to put this post together, even though I started it in March. And I started it in March, and it's under macro to micro support, where I talk about yields coming down and literally refinancing will be the result. But right now, that 10-year 3.8 is key. But so are refinancing as it relates to the mortgage market. It matters to Fed QT. You can read about more of that later. It definitely, this disinflation impulse that I have been on because of my oil chart, right? Like I literally went negative. In other words, I turned around and said, okay, I see oil falling. That's going to pull yields with it. Literally changed my higher yield call to a lower yield call in April. So it's important, if you want to find out more about how I came to that and all the details, it's up above. You got to scroll up a little bit. Anyway, this is the MOVE index. This is the 30-year yield move, a yield lower, which pulls a 10-year yield lower. So I just checked this morning. We're at 6.37. We were at nearly 8 at the time of this March call. So it's really worked. And there are absolute implications to equities, to carry trade, the whole 9 yards. And I'm very bearish. You know this. But tactically, we can do all kinds of stuff in the trading room that I can see that what's working, right? Like the rotation and the defensives, the value. And then, of course, the shorts that obviously triggered yesterday in NVIDIA and semis because they opened below weekly support, that kind of stuff. But this is a really overarching theme here of mortgage rates. This is the 30-year fixed, for example, are coming down, not just to 6, but in time down to 4. So that sounds okay, nice and bullish, since affordability is sucking wind for most home buyers, but inventory is still very low, right? And it also will have a big impact on banks. So my point is just have a look at that article further up, if you will, and then always keep your eyes focused, especially in fixed income, on what's happening with the 2-year yield. You know, the Fed funds rate right now, we get this 5.33, and we've got a spread here between the 2-year and the Fed funds head and shoulder rollover in process. And I'm very obviously bullish bonds because I can see lots of my intermarket is working together. So lower oil, but right now a bounce at 70, lower yield, but they've been defending it at 3.8 on the 10-year, lower mortgage rates. It's going to hit the 5 handle very soon. And it could be very soon, which I think is going to pull down the 10-year, which I think is more volatility for stocks. But after that little rant, the volatility that we saw yesterday, and I'm gonna scroll through this real quick. Close your eyes. Wait till I get there. Okay, so the volatility yesterday was outsized. And if you were in the trading room, I was looking at the market going, okay, but wait a minute. I know oil is crashing, and that's part of the carry trade. I've talked about that. I've written about that. Volatility, though, was spooked. And I also mentioned a very large call spread that got bought on Friday. It was 9 million, right, in premium. And it was a September expiry, and it was a 22 by 30. And VIX hadn't even made it up to the 22. By the time that this call spread on Monday got up to 22, this premium had nearly tripled. They took it off the board. Anyway, this drama, and I didn't, predict this. I'm just saying I happened to see this, which was kind of cool. But I said dealers are hedging. And I said that first thing in the morning because it was outsized volatility. It was not representative of the whole market. We had massive strength in trends in value and, you know, the XLU, the XLP, the XLV, which I keep going over, all of that, right? The REITs. But the advanced decline for both NYSE and NDX were strong. They were not falling over. This was such a concentrated thing in volatility. And I said, neither is cumulative breadth or volume. They're not weak. There's a little bit of selling, yes, but nothing to justify what happened, you know, with this volatility, which was dealers were caught offside, and they were hedging very quickly. So, and I said this, I said, normally, right, I'd be very alarmed at carry trade unwind. And yet, I still think we're going to move up into September OPEX. Now, obviously, if we crash 3.8, if we crash 70 in crude, and if jobless claims happen to print above 367, then of course I'm uber bearish. But for right now, a lot of this looked like a volatility-induced sell-off and carry trade on oil. Remember, oil is a carry trade. And long story short, it was really very, very, very focused on semis and NVIDIA in particular. So, but again, this is a rotation that's been in play for months, like literally months. All these defensive ETFs that I've been recommending since March, and then really strongly in May, they were confirmed, right? So they tagged and then they pulled back. It was shallow, then they broke out. They were great sector rotation calls for swings because it looked like rotation was going here. Plus my RSP, remember the RSP SPY ratio, which said the Mag 7 was way overbought and it was going to come down, and the equal weight SPY was going to come up. Man, did that work. So that really, really also played into this from July into the August swoon. And that was all very, 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 very much timed from my focus on growth value rotation. Wicked important chart that I show you every single day. Anyway, fast forward, someone asked me, what did you mean by dealer hedging this morning? So this is more of a quant term, and not everyone is into options, right? I know Hans, we brought Hans in so he could, teach those who really want to study options, but I focus on market, right? Market analysis, the plumbing of the market, so I can identify where the market is going to turn, what sectors to be in, what sectors not to be in, which is just as important. And then, of course, tactically long and short every live long day from a trading perspective. But this was really a good question. And this, of course, stuff that we got in the market pullback had some macro triggers. It's always going to be, in my mind, a macro trigger that disrupts the flow. And we had it yesterday. From the morning, Ueda of Bank of Japan in the early morning talking up rate hikes again. And I say imaginary inflation because they really, this makes me laugh. But the point is, this is the macro trigger. And I've said, if they talk up rate hikes or they do rate hikes, it's very negative US risk assets. So that was one macro event. We also had oil crashing down 5%, right? And I also talked about the geopolitical risks that would usually bid up oil, right? Higher risk premium. Nope. The bigger issue is demand destruction over supply disruption. So that is something that Bob has absolutely taught me over the years. And he's down here with his mantra also about there's just better things to trade. Oil has no interest right now. So anyway, the point is oil crashing 5% really, really helped that carry trade unwind, which I remind, carry trade unwind is not just yen, that differential. It is also a trade with oil separate and in addition to bonds. So there are lots of carry trades out there that are using oil as collateral. And when this fell, it absolutely triggered some of this unwind. Then, of course, we have the sell-off accelerated because of the weak ISM manufacturing index, very much in contraction. At the same time, prices are very much in expansion. So the point is, all the while, semis are basically sucking wind, really sick, right? NVIDIA leading the pack. I said it impacted dealer hedging. So I grabbed this write-up, which I thought was extremely well done by Gamma Lab. They're also another kind of quant options tool provider, A lot of great tool providers out there. Seriously, it's impressive. That did a really great write-up, and I just grabbed all of it. So if you're looking for more instruction or education, you know Hans has fabulous courses. I highly recommend for you to learn how to overlay option strategies on your portfolio or use options to either not just to hedge, but also directionally or generate income. But this is the mechanics of when I say, oh, dealers are hedging, they're off sides. They're really, something's up. They're selling out of their stocks, etc. Very quick action. And that helped press shorts. But this is some of the mechanics here and the examples. And I thought that might be helpful for some folks, long story short. Now, yesterday, before I gave you kind of the top reasons in the mornings, I had seen this, obvious oil. Obviously, we did the ISM live. And I said early, this looks like dealer hedging because the market's just too positive. It's very, very focused right now on volatility and semis. So anyway, long story short, NVIDIA fell, you're right, 279 billion, largest single day decline for any company in history, yada, yada, yada. But that was before this headline. NVIDIA gets DOJ subpoena and escalating antitrust investigation. And honestly, this could just be camouflage for something else they're investigating. But nonetheless, that propelled NVIDIA lower. So I had given 110.10, if you recall, in this price target. So the market was really clear. We opened up, first of all, we had a bearish harami for the prior week. Remember, this is week, this is day, this is hour. We had a bearish harami. We closed at 119 and we opened, look at this, opened at 116 and immediately got below that 115.82, which is okay. We not only have a gap on a weekly, but we have a gap below a monthly. That's support. Usually, normally, you'd come down here and you'd have a little bounce, and then you'd work on it to get below, right? Kind of like this did. You bounce, you trounce, you get above it, you get below it, and then once you're above it, it's very bullish. Okay, it opened there. So anyway, I looked for, and you can also see it on a daily. We opened literally also below the daily support from 813 of this 116.23. So long story short, this was like, okay, keep it below there. Keep it below here. We're going to 111, which is a daily gap, but that's not the only price target I have for today. And I said, this is the one that I have for today. It's 110.10. And I was very specific about this. I said, it will go here. And it did go here. It was there by 11 a.m. Oh my God. And this was all before, and then it just continued to be soggy, right? And this was all before the DOJ announcement. So the DOJ announcement, I'm just going to put this here for a little bit, came literally after the close. So that's the 4 o'clock hour. We closed at 108. And all we did was really dump down to 104. Seriously, they already knew, or it was part of the whole semi-unwind with oil, etc., or the volatility that went outsized because they were off sides. Dealers were off sides. So the point of the matter is this is now, overshot that intraday price target because VIX got crazy. So VIX did this, and it's very hard to tell, I know, because we have this corruption here when we hit 67 on August 5th. No, 65.73. So 65. We basically had it distorts my charts, but you can see pretty darn, supportive here on a weekly, but this was outsized. Usually, and I had mentioned, usually gets into the 21 and then it gets tapped back down. It went clear through all the way up to and through my 1929, which is a really big level that we use many, 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 many times, right? So I have this line in the sand, which is 1449. We came down into it. This is down here. I've used this many, 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 many times. Literally, it's been awesome. And I use this 1929 on an intraday, which is to kind of say, okay, if we get back below 1929, it's very bullish, the market. That's what happened on 813, right? We had basically gone sideways after the 8.5, and then markets went higher. So long story short, this went through it like butter. And I'm like, that's more dealer hedging than I expected when the rest of the market was fine, meaning, again, advanced decline, volume, cumulative breadth. Anyway, this is what Nomura came out with. Charles McElligott, thank you very much, Alexander, for passing this along this morning. And this is massive freak out. Unwinding of VIX trade caused massive freak out, says Charlie McElligott of Nomura. So it basically was, it all started with a large CBOE volatility index options trade put on last week. It was Friday. It's the 9 million I told you about. And the impact of its hedging was another proof that the space gets broken when dealers become vulnerable to sharp moves in the gauge. He goes on to talk about it. And basically, this is one of the surprises. And we, of course, have weak seasonality in September, but we still have a lot of expectation for September OPEX to be a positive and then roll over. So the market basically got busy and wanted to rinse out and test all those future bears and get them really, really excited. So anyway, he talks about this bizarre action. It was predominantly a VIX options dealer hedging event. I swear I smelled it, didn't I? I'm like, all right, so this is the mechanics of it. I'm not a quant. I have to follow quants. I have to figure out what the heck it is that they see and do. But this is basically why I was not so bearish the market. I know that sounds strange. Because of this volatility event and because of oil falling down, I basically said I wouldn't be surprised if this is just the rinse next few days before non-farm payrolls came out on Friday and we get bid back up into options expiration. Obviously, we still have a ways to go here to confirm that, but that was it. I just wanted to kind of show that to you. So 70 in crude, let's see if that holds. And 3.8 in the 10-year, I don't think is going to hold. And that's going to be the next volatility event, in my humble opinion. This is what we got yesterday in BXM, which was this options indicator as well, right? Which I said, hey, it hadn't even broken here, by the way. This I took at the last, this morning. No, 8:04. What day are we? Yes, this morning. Duh. Look at this. It had only come down a little bit, 0.86. And the volatility that we had was outsized, right? So this is all I'm saying is we have a little bit of, I think, it got extended from its Bollinger Band, and usually they have a snapback. We'll see how that goes. But big picture, I'm very, this, I'm very bearish into the end of the year, but I think it's a little bit early right this minute. Okay, dollar also contributed nothing yesterday by going sideways. Gold as well for the most part. But this was the gap right here. Do you remember this? So I had shown this before it actually got rejected, but remember this on Wednesday, August 28th. And then we gapped up on Thursday. I was out on Friday. And then this is what happened Tuesday, right? So this was gap fill. We went all the way sheer back into some support levels. Look at this. So the next level of quote unquote support is at 455 for the Qs. And you can see this was the shake and bake. We did fill that gap, and then we basically came back and filled last Wednesday's gap up into Thursday, right? That was Friday. And here we are. So I think there is a case to be made that we will be soggy. We don't have really too much today, but we definitely have non-farm payrolls on Friday. We will be soggy as crude tries to digest that 70. You can see it's right underneath it. And the 10-year tries to stay above 3.8. I am, as you know, quite bearish on both of these, but we also need a trigger. And I think the biggest, baddest trigger we can get is jobless claims moving higher. And so far, they have been, I wanted to say manipulating that data, but I have no proof. They have been making sure it doesn't move. So when it moves, fireworks. But I have a really hard time believing they're going to let it move until after the election. Anywho, let's get your questions in Zoom Q&A. These are messy charts. I want you to ignore it. There's that kind of 70 area. We've been here before, right? December 2023. We tagged all the way down here into that 68. We also, this is the busyness, right? We tagged really and got defended. So this red line is my 65. literally. Look at that. Boom, boom. It just is one of those levels where I think it really, really matters. But for right now, 70 is in the house. All right, so yields, soft, dollar, digesting, yield curve, trying to disinvert is really, really trying. And this, if it sticks, is very bearish. So now this is a weekly ratio for MAG 7. And this is where we got defended on August 5th, by the way. And this was November 1st, everything changed, Fed pause, and Yellen Yahtzee. There's a trend line. And this is where we got saved. First time we tag, second time we break. If we continue down here, here, you know what's next. So watching, yen looks very weak to that 142. Looks very weak to that 142. They're trying this morning. They're trying to get a little support here. VIX, NASDAQ, and Qs aren't seeing it so far. But see this yield curve, this yield spread between the US 30 and the Japanese 30. I use this as an indicator because it tracks beautifully with the Qs and SPY. So this is kind of that carry trade real time. And you can use lots of different things. This just happens to be mine. This is my fractal. Anyway, you can see how this morning early, it's trying to get some support. That's a 2-hour. Anyway. Credit spreads are still not in play, which is what is a little bit deceiving. And we remember the other gap fill for NVIDIA? We are there. This is important because I think this is where we're going to get some stabilization. So see this little dotted line? That's a gap fill. And in fact, because we filled it yesterday, I'm going to make it solid. Isn't that cool? All right. Now we have got one up here I have to make. So we still have, we filled all of the gaps. And then we gap down, and then we gap down again. I'm going to move that. So we have gaps to the upside we still have to fill. So annoying. Anyway, this is a gap that we just hit. Very nice. I'm expecting to see some stabilization a wee bit down here. It is a completely busted chart. There's no question about it. Semis are in trouble. There's no question about it. But I can't help but also see some stabilization. Gold and silver are still fine. And look how liquidity came down. Volatility is to equity markets what stress is to fixed income. It just, those credit spreads explode and volatility, and basically they're liquidity removing instruments. So I just caution here. We have not broken this yellow line, which is kind of key. But look at all the liquidity that came out yesterday. Impressive. Has not broken yet, but we're getting so dang close. It's ridiculous. And look what back this spread that I have. Crazy. So yeah, yesterday I did not get a chance to do intermarket because I did 2 posts for you and I forget what else. Payroll. Okay, so here is my trend line. For Bitcoin, it's just on this trend line, but we're still weak sauce. I don't really trust it. And you already know how I feel about this crossover of the 50 and the 200. This is liquidity rollover. I'm not bullish Bitcoin. So those shorts continue to work. This chart is gorgeous. This is my growth value rotation, which says we're on support now. But this was already leading, right? So in other words, we had this major growth impulse off the August 5th, and then it started to peter out, and now it's rolling over. This was exactly right into that 2. And I said, careful, it looks like a fake breakout, fast failure. Man, was it. So we're right back down to 1.9 with an overshoot, totally possible, but this is where we could get into some bounce areas for support. So I also have to look for, can't all be doom and gloom. I got to look for support areas. Okay, hold on. Good morning. Hold on 1 second. Okay, all set. Whew. I'm looking for, there we go. All right, the VIX freakout has still not gotten back inside that trend line. And NVIDIA is definitely on the 105 area. This is pre-market over here. Wow, that puppy really fell apart. That is so. All right, so these are the when and if kind of thing. When we get stabilization, I'm going to be looking for the next levels of price targets. So I'm doing this now. And part of the reason is I also will look in option flow to see how they're positioning. And right now they are clearly still in selling mode. We can see the 105 is not holding. Nothing here until we can get back above 106.48. That's funny. I've got 106.48 on the daily and 106.47 on the weekly, which is gorgeous, right? This is exactly where we broke out in May of 2024. This was the major area. I had 97.40 for that pullback. It overshot to 90.69 and then V-shaped. Everybody laughs, but hey, it was just absolutely too much too soon. We had a 10-to-1, advanced decline where everybody was when everything was going up. We've not had a 10-to-1 decline since, and usually you do have the reversal. Just get this here. Today's the 4th. Good enough. Okay, so this is still very bearish underneath the 115.82. That is a kind of support. It hasn't broken the 10 and 21, but man, it's getting close. This morning, it looks very much like it's digesting those puts. In other words, let's see. I don't see anything really wicked strong. Except that 105 that I showed you pre-market. Also in semis, said we break this 237, we're heading down to 227. Yes, it's true, we overshot that, but that was a fabulous price target. Now on the weekly, this is very bearish as well. So you have this, I've already talked about this massive, I've already been stalking a market top. That's literally the name of my intermarket analysis for semis, but the point is, major expansion candle to the downside that breaks the 10. Remember, the 10 is very important. Very, 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 very important. It's been in play since this Bollinger Band squeeze on November 1st, Fed pause and Yellen Yahtzee, right? And now they're pivoting. It's a double pivot. They're not pausing and they're cutting. So this was fully defended back here. Sorry, beginning of May. This is why that NVIDIA is so important, and the semi May that I just showed you is so important because that's exactly when they got defended. That's very important. There's a supply right here. Buyers came in strongly in end of April, beginning of May. Long story short, it broke the 10-week, flushed all the way to the Bollinger Band and the 50-week, that yellow, extreme outlier, which created that V shape, right? We had a very, very solid move higher above the 10 for 1 week. Next week, it softened below. That was last week. And now we have September. And September opened below this 239. Very important for semis as a group. And we know NVIDIA is the leader. Now look at the 10 and 21. It's crossing over. It's crossing over. Can we still have a bounce up here? Sure, but that's pretty much done. That trend already showed me through that expansion candle in July, when I literally warned on July 9th. Craig and I did a macro edge webinar July 10th. Boom. All right, so this is a weak bounce relatively and a rollover. It did come down. Yes, okay, price targets are working, and now it's getting a little defended here at 221.79. But big picture, this is really busted. Beautiful cradle formation. Beautiful. So what I normally expect for a cradle formation is you get this by Friday, right? And I've done this a lot. This all happened Monday by, I don't know, 11, but not 11, but let's just, okay. It just, most of it was 11, and then it continued to fall apart. That's a very big reversal pattern. Just keep that in mind. We don't have a gap in SMH. We definitely have a gap in NVIDIA. We are getting some monetization here, but also just note the 200. And you know, I did a big video about this, but it will take weeks, if not months, for this left shoulder, head, right shoulder. That's what I believe anyway, 3 to 4 weeks. And for this 200 day to kind of flatten out before it can turn over. So for right now, literally, that's what I would have expected for the entire week. And NVIDIA is trying very hard. Remember that 105 I gave you? Yeah, it's trying to get back in. So it's trying to sit right back up here, 106.47. TSM is another one that has started to roll over. Exact same MO. That was a amazing candle. I won't kid you. That was a breathtaking candle. And it's rolling over, but not as much. And 158.40 has tagged, and it's having support. It's still weakening. Semis are weakening. And that's really all there is to say about that. DKF Sporting Goods, big old kind of distribution up here. 120, let's go 225 kind of thing. It still hasn't broken the 10 and 21. Looks like it wants to. It literally came down to 208, which is the 100. So it needs to break this 20, let's call it 209. That's very extended intraday. That's very choppy on the daily. That's very much distribution on the weekly. So I'm liking, actually, if then, DKS might need a little bit of time, but it needs to break that 208.88. So that was this morning. Rocket's doing fine. Rocket is a recommended, basically warm summer housing market stock in refinancing. And I did warn, it's very extended from the mean, which is down here about 18. I still suggest protect here. In fact, yesterday I saw it got a downgrade. The 10-year, to me, looks, sorry, this is the 30-year. To me, the 30-year looks like it's still going to break that 4.05. Remember, the 30-year fixed income mortgage rate is actually 6.37 right now and falling. I firmly believe it's going to be in the 5s very soon. Look at that. Okay, so the market's absolutely digesting, but volatility is still running amok. VVIX, a little calmer. It hit the Keltner channel. Little calmer. Volatility of NASDAQ also got very busy yesterday. Little calmer today. AMD, big expansion candle, and now it's kind of setting up for maybe a bullish harami, but it is not really compelling to me yet. Yeah. Keep it above 138. You can see 137.70. You can see 138. But that's another example of a rollover. Look at that huge expansion candle. In other words, trend is breaking down. Evening star reversal. Couldn't get above, one and done. Total bull trap right here. 100% bull trap. Tanked. Extremely oversold. Extended, in other words, a standard deviation outlier that reverted on August 5th with size. Look at that. Oh my God. Anyway, it got up to the 200-day and then it's completely rolling over again. So AMD's not going to save anyone's butt. TLT, know how I feel about it. It's still bullish. It's more bullish than bearish, and that means also yen. They kind of travel together. Kellogg's is at a conference today. This was recommended back with utilities, and it has been doing phenomenally well. This is the rotation into defensives. It is extremely extended. So keep that in mind. They can be fabulous trends like KO, like GLW, like utilities, staples, healthcare, but they can also, or like Rocket, they can also get some profit taking. And they do have a conference today, so kind of keep that in mind. Exxon is not going away, but it's also not going anywhere fast. US Steel, we already played that one. That was a gorgeous short. Kamala Harris out saying she doesn't think they should be bought by Nippon Steel. I just don't think there's any more, juice than it's not worth ringing. Intel, poor thing. Just it's like book value right here. Terrible. Dollar General reported last week. Look at that fall from grace. Talk about the K-shaped economy where Ferrari stock is all-time highs and dollar stores are all-time lows. Very sad. High income versus low income. Dollar Tree reported this morning. It had already fallen in sympathy and it's just getting wiped out. Very, very, depressing. Okay, GitLab, I didn't see what the result was, but obviously that is a bear trap and a nice bullish move, actually. It's not my typical idea. I don't really like this one. This thinness of this one. But anyway, the point is, it is trying to make a run for 54.50. And here's the 200 up here. Actually, not a bad chase for GTLB. But just, I haven't researched anything about it. Let me just see. GTLB. We know Dollar Tree. Hormel Foods and I'll go through all that stuff just a second. Okay, Q2. They definitely beat on EPS, 15 cents versus 10 cents. Revenue's nice, 182.6 versus 177. I'm rounding up. Margins, 91. I would say that's pretty strong. They are guiding higher, marginally higher. But it seems the market likes it. All right, so this is getting a little boost here. Looks like it needs to get above 53 though. ZS disappointed in a big bad way, although they beat on earnings and revenue. They guided lower. The killer guide. All right, so they did actually beat. Fascinating. Market didn't care. There you go. This is all part of the space. I'm not really excited either. It's just software is having a tough time. Let's see. So we know NVIDIA is trying to hold that 105 that I showed you in the 2-hour and this 106.5. SMCI got downgraded, so no bounce for you. And remember, I still see 357 firmly, like very strong. Once we rolled over, this is, by the way, already broken, right? Broken, little bounce into resistance. As soon as we broke that 66, it was this was the channel. And I gave 428.69 and we tagged little over, but closed back inside. Thought we might have a little bit more of a bounce yesterday, but hey, that was before I saw semis falling apart and Nvidia down almost 10%. So long story short, I still have 357, which would wipe out the gains of this entire 2024. Here's that BXM I was showing you. It's definitely extended and makes me crazy nervous. And this was yesterday. It wasn't such a big breakdown. And if you look on the hourly, you can see where it got extended, right? The Bollinger Band usually doesn't have such a big success of staying outside of the Bollinger Band on the intraday. You can kind of see where gets above, comes back in, gets above, comes back in, gets above, comes back in. This is a recording. Well, this is that was way below the Bollinger Band. See how it's opening up? So the fact that it's stabilizing is not a surprise, but the fact that it's extended on a weekly, I mean, these were manipulated times. I've never seen that before, ever. So anyway, long story short, the V-shaped recovery that we got in markets is kind of represented in that BXM. And now it's rolling over. But I mean, this is what we had yesterday. This is why I said, hey, I can't be so, gosh darn bearish when we had this kind of thing going on. We had advanced decline. Let's put this in white. Right here. Nothing. We had an evening star reversal in the making, but this is still in trend, right? This is still moving higher. So it wasn't dramatic enough to warrant being so worried about volatility. It was volatility that was worried about dealer hedging. This was really, this is literally what we had. The start of an evening star reversal, which is bearish, but coming back down into the 10-week right here is not a big drama. And it's still in trend, moving higher. So it's a topping pattern, but this was really at 2 o'clock in the afternoon when SPY was down over 2% and the Qs were down over 3%. We had nothing in the rest of the market. It was very concentrated in semis. And look at the breadth. Look at the breadth yesterday at 212. We had positive, not for nothing, but this was positive. So it was one of those deals where I'm like, yeah, this is dealer hedging. This is very concentrated. They're offsides. Again, this is volume at 2 o'clock in the afternoon, the start of an evening star reversal. But that's all we had, 0.28. That's not a lot. So anyway, we'll take a look at those now, those indicators. But this was the result by the end of the day. We had outsized volatility. And small caps were still above the 212.25. That was really critical. Diamonds were not even, here's the 10-week, by the way. Oops, sorry. Like here, this is the 10-week. This thing is still in trend. Diamonds are still in trend. Small caps, they're still above the 10-week. It was very focused on semis. This was one that I was worried about, this SVXY, which is the inverse VIX, that crashed all the way down to literally November 3rd, 2023 lows. I talked about that then. We made a 50% Fibonacci kind of bounce, and then we started to roll over. There's the 200 back here. You can't see it in green. That thing just collapsed by 2 o'clock. That was volatility. It was wicked outsized. That was another reason why I was like, now this looks like, and I wrote about that in Market Thoughts. Look, when this comes down, it gets like a bounce. You get outside the Bollinger Band. This was a standard deviation where literally what Nomura talked about, the freak out, that is a really good way of saying it. This is the article from this morning. Massive freak out, not normal. That's exactly what it looks like to me yesterday as well, just because of the way that technically this doesn't usually have such a massive standard deviation move on the intraday. But luckily, I had already gone through and said, this is the area for this growth value rotation. And we are falling into the 190, potentially 185, which means still more pressure. And then I, of course, had shown the big picture of my NASDAQ composite. We're breaking down this channel. We can now, let's see how we do at the cherry picked indicator. And then with semis, we're coming down into 0.39. And so then I wrote this just so you have it in one place. Hold on. And then I'll go over questions. I'm just aware that this is, I want this market to kind of digest, but I also want you to see what I see in case it helps. And I posted this also in the afternoon, okay, which is, again, my Slack canvas, which shows all these charts. And when I said I'm looking for a market top, and then, of course, this retrace from 0.49 to 0.39, which is going to be an area where I think we have or should have a bounce right here. So yesterday, when I showed this, we we're at 0.41. I said it wouldn't surprise me if we come down to 0.39. I'm still looking for that. And then let's see if we can get a bounce. Big picture, I still see semis in a big old head and shoulders, but it could take another 3-4 weeks. Anyway, that's what I'm looking for. A 200-day tag. Come all the way down to 214, etc. Anyway, so that's an intermarket analysis if you're looking for a level where I'm looking for a bounce. And then, by the way, it better hold. I should extend that here. It better hold or else. All right. So the Qs are kind of hanging out at this 100-day, but that is a very strong cradle formation, which begs to, question here how long it's going to take before we're back down at this 449, right here. So it still does look like semis. Look at this kind of shape, right? Here's the 30-week. We've already hit and rolled over with the semis, and there's still weak sauce. So the next, as I posted yesterday, right, that chart, I still can see that 214 area. Look at the 200. Literally just talked about this. This is 214 overshoot, which means we're trouble. If it does not bounce there. But this is what happens, right? You short into the 200, has these, we had a massive reflexive bounce, and now we're coming back into the 200. So I would still leave your 214 is general, but look at the 50. Let me just, here's the 50 week at 212, 28. 212.28 is the 50 week. The 200 is at 216.79. I mean, if you're getting really into the weeds here, I would just say it's going to come down into this 214 area. Would not surprise me at all. Hey, Mark, so let me look at those now. Did you also ask me, oh, I think you did ask me, yes. Okay, yeah, you're the one who asked about Jazz, right? The biotech play. and the Italian utility play, right? Okay, now I got it. So, yes, very much like the medical anything. So the XLV we know about, that's clearly continues higher. IHI medical devices is thinner, but fabulous. Let's see, we got a slower. Let's just see here. I haven't looked at this one in a while. The prior high, which was back in March, it's obviously digested a while. Tried to roll over here, but got defended. Really needs to stay above this kind of 57 area. Not only can you see the 10-week, see how it's moving, right? This is flatlined, not very exciting. And now it's moving higher. So the next level it needs to break out is 59.14 to be specific. So IHI is still looking very good. Needs to get and stay above 59.14, and 57.25 is where it needs to stay above. Now, within this, however, it has got a lot of names. Very, very, very nice bunch of names. And this is where we've already gone kind of shopping. So this Abbott has been playing around. This was a massive reversal candle, consolidation, and it's also moving up. Needs to get above 115.69, but that's obviously, I'm looking at kind of the largest plays within IHI. ISRG has already been a gorgeous swing long, trend long. It's stunning. And yeah, it has a little bit of the AI panache, but it's also extremely well run. This is one that just really broke out at this 285. It transitioned it into a swing long. It has just continued up and to the right, 45-degree angle with a little bit of shake and bake. But look at the 10-week. Look at the 10-week. Stay above the 10-week. You want a little bit wider? Stay above 447. On a monthly, we're coming into the next, quote unquote fib level when I have to try and find some price target mark because it's in blue sky. The next fib level is about 525. And typically they get into a fib level and they digest sideways for a while, etc. So if then, definitely strong for IHI. And then Striker also breaking out. Little snaky action. There's your 50. I haven't looked at this one for a while. Beautiful. It's like literally just about, it is all-time highs. Beautiful breakout. Gorgeous. Oh, yeah. Beautiful. All right. So SYK looks fabulous. I'm going over just the top 5 or so. BSX has been, oh my goodness, since Archna actually suggested this, and Alexander has followed up on all of these, they have stayed extremely bid. Beautiful 10-week Keltner channel. We got a little pullback here of size back in early August. Look at that gorgeous bullish engulfing back above the 10-week and breakout. So your IHI is a sector ETF that has some of the best looking trends in there. Abbott's still working on it. ISRG has been hitting it out of the park for a year now. SYK is just starting to move higher. BSX has been in play for a good long time. Stunning. Actually, I think Archna recommended it back here at 46. Yep. Anyway, these are beautiful. MDT was a recent one. Because it did this formation, I liked this a lot. I've written about this also in Market Thoughts for Swing. If you like this, keep it above 84 area, and it's already pushing above 88. 65, there's your 200, little tussle, 200 week, and now it's pushing above that. Gorgeous. So MDT continues to be a really strong leader in IHI. So you've got the top 5 weighting in IHI. That's what I do. I look at the absolute best stocks in the sector to see how they are sizing up. And I like those. All of them. Every single one of them. Nope. I don't like BDX. I don't like EW. Isn't that funny? I don't even want to look any further. I just like those are drags on IHI, unfortunately. Those are drags. Dragging it down, dragging it down. All right, VRSN, and then I gotta look at some other things here. No, VeriSign, oh my God, I remember this one. No, not a fan. Not a fan of this distribution top, distributive top. Not a fan of the descending 200-day. I actually know this company. It was my backyard, Burlington, Mass. Or is that RSI that was bought by VeriSign? Something like that. Anyway, it doesn't matter. It hasn't broken this kind of purple line. So if you're bullish, make sure it stays above 175. Really, really what it needs to do is get back above and stay above this kind of 188. I'm not so, there you go. It's just chopping all over. Not so excited about this one. ETRG, that's energy. No, that's health. No. ETRG. Huh? Help me. It's not coming up. ETRG is not coming up. I do not think you mean Entourage Health Corp. WTRG. Thank you. Yeah. That's definitely not okay. So utilities I really, really like. This is a small one. I don't know anything about. I've got no lines on it. It looks okay, but it's thin. So you're clearly not playing options. It's broken. It's trying to get back in. I don't know this one at all. I can see that it's trying on a weekly to make, right, from the October 2023 low kind of thing. It's trying to make a higher low, but it really needs to get back above all this junk. Junk defined. 43. Stay above. It's sloppy, it's thin, it's not really great. Yes, MDT is gorgeous. Yep. I like this one. It's going to have a tussle here until it digests between this channel, but that's firmly in play. In fact, this is a doji sandwich. That's the word. Expansion bar followed by a doji equals this from peak to trough. So it's got some more to go this week. But then I think it's going to digest a little bit. It still looks fabulous though. Look at that, 91 just tagged, beautiful. Made it all the way back from July of 2023. That's 1 year of losses have just been made up. So it's got to absorb all those sellers because market is all about the auction of buyers and sellers. And that's exactly what it's got to absorb. Would not be surprised if this heads up to 92.39 quickly. Yep, MDT continues to look great. Hey, Nishant, how are you? So excited. You were on sabbatical for like, I don't even know how long in Asia, right? Congrats. All right, let's look at gold and silver. Love that you're back. Okay, thoughts on silver and gold calls, and you're looking at January. So, okay, we know that gold has already made a momentous turn from this Morningstar reversal, right? Beautiful. That's monthly. Had to get them up monthly. Took a while. And then March 1st, everything changed, right? Everything changed. So March 1st, gapped higher. Very bullish. And you know my gold silver ratio, or maybe you haven't looked, but it's still very, very bullish. There's no question. And then we gapped higher, and we've got central banks, and basically gold is the new bond or the new risk parity, all that. And Craig has been on top of it, et cetera, et cetera. It did digest though. Look at this 1618. It digested a long time and it's having a hard time actually getting and staying above it. We're talking that March to April was hot fire flames. Mid-April, it has pretty much gone sideways. And I mean, it has really gone sideways through April, May, June, July, and August. Still rising. Now it's got to stay above this 224 area. Can it come back and retest? Oh yeah, especially if the dollar gets busy again. So just make sure you keep it above here, this 224 area. I have a bullish big picture bent on it, but I'm always really nervous about it when we start to get into correction territory. The dollar, when we really get into correction territory, that dollar rotation can put a big kibosh on gold in short order, really quickly. But we're not there yet. So I still think it's a good, swing trend long, whatever. Anyway, you're asking, hold on, let me just get something clear out of the way. I just want to get some stuff out. Yep, I'll do that in a second. Okay. So on a monthly, we have cleared, this was very bullish engulfing back in November. Again, gold loves loose monetary policy. Look at that 10. Look at the 10-month. Hold. And then that's the monthly. 2 levels of monthly. It got above on March 1st. Massive. Massive. Just push higher in March. I'm on a monthly, by the way, just to see. But now we've been going sideways. 1, 2, 3. Last month we pushed above 220. And look, that has got to hold. Still same thing. The only problem I have is that we're very elevated from the mean, which is about 213. We're printing 230 in GLD and we're 213 on the mean. Oh boy. The heck is that? Yeah, ignore that. Sometimes I do weird things. I mean, we're definitely extended from the mean. Even the quarterly is at 194 and change. So only worry I have is that we're extended and we're likely to have a little pullback here. I wish I had high conviction now. It was a lot easier back here. Like literally, I wrote about it on March 1st, and then Jeffrey said, hey, silver's going to have a squeeze, and man, did we. But right now, I think we're just nicely in trend, but make sure it stays above 225. Otherwise, it's going to come back down into, remember I said the mean was 213? By then, it would be about this area. So that would be the channel for support. Apple, Amazon still soft. Yep. Let's take a look real quick. Jolts also came in. All right, hold on. Silver. This is a little bit trickier. This is a lot harder. And I almost prefer a call spread into January, honestly. So this did a bearish engulfing and then dumped right back down to 25.5, but it really is still trying to work higher. Make sure it stays above 24.5. You got your 200, it's still moving higher, but it's choppy. So I'm giving you more levels to make sure it stays above than an actual price target because precious metals are not in play right now. They were in play. Now they're digesting. Does that make sense? Chris Ferrone put out technical last night on Fast Money. He said hide in September in BMY. Let's take a look. BMY is a bottom fishing play that may or may not work. I am not so excited about it. And yet I can say, I see this beautiful expansion candle hitting its head on the 50, trying to get above the 50. I see a crossover on the 10 and 21. I see the 200-day coming down and trying to bottom out, but this will be months before I would recommend this. Months. I think this has to bottom out and move higher. Really going to be tough. It's not that it won't work, but it definitely, and I believe Alexander has written about this in his Yeah, Kenton's Corner Biofarmer. I think he has written about this, but this is what I mean by it takes months before that 200 comes down. So here's a gorgeous pattern for Rivian. And yet it's come all the way back down to test the breakout. And it could be here a while. That 200, just as like an example, that BMY can have a beautiful advance, but it's going to need to digest here and get this thing down and flatten out and move higher. What's the other one he said? ELV. Elevance is gorgeous. This is a healthcare plan, very much like with, UNH. Apps, my number one choice. And it did a shake and bake down here, but then it got right back out, right back up. Cigna. Also, this was recently recommended. This looked like it was going to clear. Healthcare plans are in play. And you had a gorgeous catch-up trade here. Cigna's working great. So Cigna and MDT have been talked about. Humana, not so much. Humana is not coming up off the ground enough for me to really like it because look at that 200 descending. Gross. Again, this will take months before it's safe. Are they absolutely coming up and trying to play catch up? Yes. Does this look like a nice scoop pattern? Yes. The problem is I think it will move higher and then it will hit its head and it'll come right back down. So I don't think it's a trend reversal. Let me put it that way. I don't even know why it's popping up this morning, up 4%. Merck's having a tough time. Big, big, big dump. Not safe. Aerospace and defense is also a very, very just exempt Boeing, but aerospace and defense has been hot fire flames. And you've got RTX, phenomenal. LMT, phenomenal. You know how I feel about Boeing. I don't even look. Just not worth it. I'm not even going to look. GD, fine, has not broken out. That's likely next. NOC, we're doing weightings here. That took off like crazy, finally. Anyway, but this is different. ERJ must have some news. REITs are doing awesome. This is well beyond its norm. This is, Alexander suggested this one. Is it assisted living? Okay, so we know what's moving today. It's very, very, very clear. I'm showing you. ERJ is in that aerospace and defense trend. By the way, we had beautiful 52-week highs yesterday within utilities and XLRE and staples, right? And healthcare, and they continue. This is the real estate. This is a REIT. It's still doing great. This is BSX, medical devices, still doing great. UNH, healthcare plans, still doing great. When these start to come down is when I will absolutely look for a growth rotation. But they're not yet. Or just why buy anything? Because they're selling everything. Right now, they're still selling Apple. They're still selling SMCI. This is rotation. Duke looks fabulous. Berkshire Hathaway, really, the golden touch. 1, 2, 3, 4, 5 weeks of green. And the mean is down here. So selling Bank of America shares every single week. Out of Apple, 50%. I think Philip Morris and MO were, I missed them completely, and apologies. This was a fabulous breakout. That's about all I could do on a technical, and it's always an if-then to me, which I know sounds strange, but this was actually not anything to do with technicals. It had to do with the Supreme Court ruling about the Chevron doctrine and removing regulation and such. Really, really, really helped Philip Morris and MO more than any other stock just because of that directive. Crazy. Utilities, look at SO. It looks like Duke. Looks like, well, money's going here. It has nothing to do with the AI theme right now. It has started with the AI data center. We need more energy. But we also have what? Phoenix is above 100 degrees, 100 days in a row. It's also rotation, et cetera, et cetera. Colgate, really? You think they're making more money? Or you think money's rotating here out of Mag 7? Yeah, that's my opinion. And ABBV drug manufacturer recommended this is still 45-degree angle and just recent breakout. So MDT, CI, and ABBV, I still think they have some room to go. Rare was recommended by Alexander. It's a biotech I know nothing about, but it's actually holding really well above this 55 key level. All right, so what do we have here? Reversal that got rejected. This is in trouble, actually. Let me look at some currencies and stuff. Ooh, nasty. Yep. Okay, so you know, I feel 142 is coming into a theater near you, which is the dollar yen right down here. And this is the August 5th takeout. This is what we need to really, really, really stay focused on is we already had some oil selling. We have TLT bid, fine, nothing, you know, fire rockets. Yen bid, just fine, no fire rockets. But man, oh man, if this breaks through 142, which is down here, there'll be more gnashing of teeth. So right now it's trying to consolidate at this 100-day as it rolls over. I still see it as rolling over. This is where we were August 5th. Market is just not happy. Yeah, forget Zim. What else did I have? Target, nope. Nordstrom, no. The only reason I have a look at this is because Druckenmiller bought about 5.4% of this. And I think it's an AI kind of play. This is one I have on radar as an Alexander alert, not alert, that's the wrong word, but just to watch for it. So there's some things I have on alert. That was a fabulous short, just gorgeous, stunning, and it's still a mess, right? Gorgeous, gorgeous short, right into that monthly trend line, bounced and then got completely pummeled, and now it's just bouncing into resistance. Yeah, monster, done. Lynn is a chemical, hello. There we go. Lynn is just this freak of nature, specialty chemical player that is still in play. Now I'm going to look at the indicators and the markets. Not falling apart is a good place to be. 200-day tag. I'm strangely still attracted to this widow trade of Gilead. It's still doing the work to try and get back up to 85.31. Amazon sitting at that 200-day. Microsoft going nowhere fast. 556. What do I have here? Gap fill. 5.5. Oh, 5.5. I have here. Why isn't it? Hold on. 4.5. Oh, that's the gap fill. Yeah. Okay, so this is the gap fill, which it's an if then, right? So yesterday I gave break of 468 brings 465. Break of 465 brings 460.5, break of 460.5 brings 454.37. So 1, 2, 3 out of 4 in play. But if we're going to break this one, we're going to go down to this. If we're going to break this, there's your 200. Basically, we're just soggy. Really, really soggy. Tesla's still fighting to try and get back above that green trend line from November of 2021. Playing sideways shuffle. All right, so let me see the indicators. Yeah, looks just like, you know, what I showed you yesterday. We're still in distribution on a daily. Looks like an evening star reversal for breakdown, but we're still in trend higher. So advanced decline is threatening, but not falling apart. Advanced decline of NASDAQ, again, distribution, potential evening star reversal if it actually comes back in the Keltner channel. But again, this is a trend higher. We're not falling apart. Breadth, look at the breadth. That's a positive reading. Like literally, we stopped going down on August 13th. This was the August 5th shake and bake. But we stopped going down on August 13th and started moving higher. Look at the green. Green breadth expansion, green breadth expansion. We're still having breadth expansion. So this happened yesterday, all because of VIX. I swear, it's all because dealers were offside. And the carry trade on oil threatening. For sure, for sure. I still really, really see that. All right, so we're still on this 190. Bitcoin is right on that trend line. Wow, dollar dumped. There must have been news and I missed it. Okay, so dollar, as you can see on this 2-hour, came down. We must have had jolts or some kind of economic data and I wasn't paying attention. I was reviewing something else that was important. Anyway, that's what's helping the market kind of stabilize a little bit. But crude and 10-year are not good. Below 70, below 3.8, if they stick the landing and follow through. One and done doesn't do it for me. This happened on the 5th. You know, it still is trying to hold in there. But dollar dumping with oil and yields, not a great recipe for stocks. Not even a little. All right, let's see. Look at the blue line. Qs basically came down and tagged, and they're liking the dollar drop, by the way. They turned tail right on that 52.23. That's all right. Oil looks so weak. I want to just see something. Humor me for a quick second. No. Never mind. Here's that inversion. We're pushing, trying to go positive from negative, the 2 and 10-year yield curve. I have a hard time believing it's going to stick, though. Oh, the GitLab? I'm sorry. 54.30. Nice, huh? I literally just talked about that. It looked very bullish into 54.50. It got above 53. That was a bear trap of size. Look at the Bollinger Band expanding higher. And there's the 200. Looks like it wants to make a beeline. But right now, if you chased that, it held 50.5. It made it to 54.30. That's intraday. This was a nice trigger. And that's definitely a nice price target. But that's going to be a lot of work right here to try and get above 54.50. So good luck. I think that's a lot for now. I strangely don't like this after this little bump. I don't think it's going to last, unfortunately. Coupang is the Amazon of South Korea, and it's owned by Druckenmiller. It's trying. Look at Redfin also trying on the 30-year coming back down. Do we get any news on Tesla? Or it's just they have to chase something and Tesla's their choice? I don't know. Pretty interesting. Looks like market's just trying to stabilize with the dollar falling. What they don't notice, however, is of course the fact that we've got yields and oil breaking key levels. So I'm less excited. Let's just put it that way. All right, so Apple, it had to fill 223, 230, 233, and then it got rejected, came back inside, dumped with the market on Tuesday firmly, all the way back down to gap fill of 217.71. It should pause here. It should. This is the 55-day. Yeah, I think that should be a good place for it to pause. 220 is the prior high of June. So that level is kind of key once we get back above it. That's the 55. 220 is also key because it's the 10-week. Dang. They don't even want to take this on. Rolling back over, hasn't given up. That needs to give up. They're buying a little bit. So they sold yesterday, but we still haven't broken. This morning, they're trying to stabilize on a falling dollar. Small caps getting supported at the 55. But you also know how I feel about this 212.25. This was yesterday. We broke. We're coming back into the underside. Needs to get back above 412. This is definitely the strongest of the four indices. Look how far above it is from its 10. Look how far above it is from its 200. Diamonds are still better bid. Small caps have not broken back down below this 212.25. Qs are below the 10, trying to hold that 460.5. You can see they're trying. Look at this trend line even. Trying to get back above the 200, that 100, which is this purple line. Trying. And yet, oil, that 70 mark, 10-year yield, that 3.8 mark, and the dollar yen looking very, very firm, like a rollover into 142. not. But this indicator that I showed you first thing this morning, pre-market, how it was trying to push higher. Look what's happened with the market. It's trying as well. One of these is inverse VIX, and this is SPY and NASDAQ. It's trying to stabilize. I love that indicator. It's really, it doesn't do much on a daily. You can see it's just an itty bitty little, hook. And big picture on the weekly, we're still rolling over. Look at that. Boom, boom, boom. But I'm talking intraday on the 2-hour. So that showed me that we were likely to get some stabilization in the market this morning. And what happened with the NVIDIA? Bingo. That gap filled first thing this morning, whatever, 105, now pushing back into 108.40. Very nice little bounce. Very nice. Look at that. Love how that works. Love gap fills. Love my funky little strange, unconditional. I don't care what they're doing. I just like following it because it typically is a lead of what the market will do. So tends to work pretty well. We haven't broken that trend line. And we've stabilized on 190, but not done anything else but stabilize. All right. One of those times where I'm looking at the dollar dump causing the market to roll higher while the things that really matter are actually falling apart. That's not what I wanted. Yep, look at options are coming in. They're bidding up the market right now. We've got to get above this trend line to really get going. Yep, look at XLK. It came down almost to the 200-day. Ah. All right. Right now, NVIDIA is up 4% since the open on really fumes. And we got lots and lots of shake and bake and semis. And NVIDIA literally hit that 105 that I showed you and is up $4. So they are trying. They are trying. Weakest stock right now is Apple, but that 217.71, quote unquote, should serve as support. Okay. Okay. So far, it has held that 28. Dave, I know you like this one. It's got to hold the 28. So Jolts came out. Wow, this is breaking though. Seriously. 10-year just dumped right back into my line. Where the heck is this thing? We got that. Sorry. Here. There we are. I still like Redfin. All right. I don't trust surveys, so JOLTS doesn't do it for me at all. Just I don't care about it. I care about unemployment claims. That's the indicator that I follow most closely. And construction jobs. Because if we lose construction jobs, we've lost the economy. I'm very straightforward about that. So that's all I tend to I keep it really simple. All right, so Johnson & Johnson trying to break out. I wish I liked drug manufacturers like this, but I don't. BMY and Johnson & Johnson have just lawsuits and so much overhang. UNH, very much like, recommended that early, way early. ABBV, same thing, gorgeous breakout, retest, back in here, it's doing great. But I don't like Johnson & Johnson, but you're right, you're right. It is absolutely trying to break out. All right, so. Oh, GDX kind of goes along with the silver and gold theme. It's very choppy, but I still think this has a lot of room. As long as the underlying does well, they are printing money. Their earnings are so much better now that gold is, 2,500 than before. Hey, Alexander, good morning. PODD is Alexander's most recent, newest recommendation. It has a tubeless insulin pump, which is going, they're beating competitors. So I did put together an annotated chart because I have nothing else on this, and it's on a monthly time frame. So I wish I could give you more, but it has to get back above this level to really be to be really, what do you call it? Confirming. But you can see this morning it's moving higher. And I do like the fact that it has stopped. The 200-day has stopped going down. It's digesting. It's trying to turn. But this is something that I think is going to take a while. But it looks good. His report looks really good. All right, so Pod was a recent review he did. He also did a few detailed analysis on 2 stocks for clients. So thank you very, very much. Oh, yes, we have this afternoon, 4 o'clock, we're going to do a macro to micro power hour. Craig and I will get together. He can catch me up on everything that he sees in the world of macro. And Fed heads are out. Oh, Harker's actually going to be retiring this year. Look at this move higher. Yep. This is where it needs to stay above. Very important, 550. So yesterday I gave that level for SPY. You can see it, it's monthly. We've been here before, we got above, then we broke. Really simple. It needs to stay above. Very, very, very clear. And we hit really 550 perfectly. So we're having a little stay of execution this morning. I don't think there is, I don't even know what to say. There is a clear path here. We're going to have to wait until non-farm Thursday morning, tomorrow, jobless claims, very important, and non-farm payrolls. I do believe this market, though, this morning was trying to stabilize for 2 reasons. One, this VIX call was way outsized. By the way, it's coming back in. And use this as your template. If it comes back inside 1929, market is much more bullish still. So I really believe that what I said yesterday about the dealer hedging, it was very much a focused thing on VIX. It was absolutely not being represented in the market because everything was still very bullish. Advanced decline for NYSE and NASDAQ. Volume, cumulative as well, the whole thing. Anyway, it looks good for stabilization and a bounce, but big picture, I'm still very bearish. I hope you can follow that. But in the meantime, in the in-between time, NVIDIA 105, now 109, SPY, Qs, all that stuff. They're trying to stabilize. And the 1 week link is clearly Apple, but we do have some support here at 217.71 for a little chase. Yay. Is there any other news out there? Anything else besides the kind of drift that we have right now? We'll shake and bake intraday on utilities, but big picture, they're still doing the heavy lifting. XLP, look at this monster breakout, not since April of 2022. And we've already talked about XLV being really strong, retest higher. All right, so we have that. We know market is outperforming in those three sectors. We know that's a defense posture. I would say that is rotation, strongly rotation, even though semis and NVIDIA and FANG went hot fire flames into literally July. I would still say this looks more like distribution. There's your trend line, by the way. Massive, massive. That's your August 5th low. You gotta get and stay up here to keep going, not roll over. Foreign bond investment, August 30th, tonight. For end of August. Oh, thank you. I didn't read that very well. So tonight, JPY, we get to see what they have for US Treasury holdings. Is that correct? On that one, it's very blurry to me, but I think that's what it means. Okay. All right, so the yen would be in play. I think it's kind of ironic. The market pops on jolts. Really? It was not even great news. Anyway. GLB, GitLab ran hot sun, 54.50, and Chewy had a lot of call buying. So it's trying to put in, you know, a showing. I'm not excited about either, but I'm just pointing out. If you have anything else, let me know. But otherwise, I think we just have stabilization day. I don't know if I'd really call it turnaround Tuesday, but it's not terrible. Trying to see if there's any other news. It took an extra week, but this did roll over. Arista. Yeah, so we have lots of distribution in play, but I think that's it for today. There just isn't a real heavy push. I mean, NVIDIA is still the largest company and the largest sentiment tell. And long story short, it tagged that 105 and it's now up to 109, and this is just how the game is played. So it's stabilizing. I don't see anything else for macro data unless I've missed something. I don't have any other big sector rotation tells. Your MDB is still hanging in there above this 278. It really not too bad. It's trying. I'm still not crazy about that either, but it is definitely trying. Diamonds are the strongest of the 4 indices. And this is still in a massive weekly squeeze, very extended, way late to enter it, more than a chase, way extended. I don't have anything else. This is just, I'm looking at charts, but I don't see anything of high conviction. I've gone over trends that are still bid strongly. Macro news isn't so key today. It's Thursday morning, Friday morning, pre-market. And then, of course, 4 o'clock, Craig and I will do macro to micro power hour. I think bounces this morning. Not such a surprise, right? 105 to 109. I mean, that's just really, and I don't think that's, what do you call it? So safe, but that's exactly why I think the market is bouncing on a falling dollar. Still watching 70. Let's see if it gets defended. Still watching 3.8 in the 10-year. Let's see if it gets defended. They love this ASTS, don't they? Space Mobile. And I got an upgrade from Deutsche Bank from 22 to 63, maintains a buy rating. Anyway, that got defended, blue line. So I wasn't too worried about it today, but it is definitely a stronger bounce now that we're going into the European close. Volatility is coming back down, which is key. And as I mentioned, I think that 70 crude and 3.8 in the 10-year might get defended. But for right now, let's wait and see how jobless claims and non-farm payrolls look. And right now, I don't expect either of them to surprise. When they do, that's when recession risk will be called later. In other words, if they trigger in, we're in September, in October. I don't think they're going to trigger in September. They trigger in October. 3 months later, Neighbor, that organization, right? It is likely to say, yeah, we entered a recession in October, that kind of thing. That's where I focus on it. It probably isn't going to be until December. I don't think we're right ready yet to call it up. I think that's all. We have to kind of pace ourselves on that. But for right now, market definitely, this little indicator showed we were going to turn up, and sure enough, the market is. So from a tactical standpoint, we're getting supported. And from a big picture standpoint, semis are calling uncle, but that NVIDIA bounce at 105 back into literally 110, gorgeous, etc. Gold and silver still in play. Watching liquidity very carefully. But that was clearly some dealer hedging yesterday on outside VIX. Look at Bitcoin get supported right here, itty bitty. I do expect, VIX just crossed down through my key level as I was talking about it. And look how we've even bounced a little bit. You can't see it, but we had already tagged this blue line. We're already starting to bounce. That's it. Market wants to, look. Remember, got inside the trend line. It's coming back down. Market is bullish as long as this thing is falling. Maybe we make it back down to 18 before we get some more shake and bake. All right. I think I answered everybody's questions except Andre, you just popped in late. Okay, so hold on. MCF something. MCFT? You always find the most interesting ones. Andre, I've never looked at this before. Don't know a thing about it. Yeah, maybe you like it when it gets extended and then it puts in a reversion. Right? Gets outside the Bollinger and Keltner and then puts in a reversion. That's almost where it is now. Love to know where you find these. So the problem is this is still in a downtrend, big bearish expansion candle. It's breaking the Bollinger Band. It hasn't even pierced yet, the Bollinger and the Keltner. It's rolling over in the oscillator. On the daily, it's very extended. 200 is still descending. Kind of messy. Earnings not until November. Only thing that looks viable as a potential chase is on the 1 hour. On the 1 hour, we've got some support here at 1741. But otherwise, I'm not attracted to this at all. So if it can stay above 1750, maybe it has a wee bounce. Unless you know something, I just don't see anything here very exciting, if truth be told. Sorry. Yeah. Let me see if I see anything on a monthly. No, even less on a monthly. No. Nope, nope, nope. But I don't know your time frame. You got to tell me, like, what are you looking at for time frame? This doesn't look like a productive use of money, unless you know something. All right, I wish you a great afternoon. And I'll post the macro to micro power hour tomorrow. Anyway, don't get ground up today. Be careful. Have a great afternoon. Cheers. Bye.